John Crasinos, Editorial Director of Investing Daily, with a video presentation for Friday, June 11. Well, despite a big year-over-year jump in the Consumer Price Index for May, the S&P 500 greeted the news by rising to a record high. Go figure. Look, if you're worried about inflation, you have every right to be. Whenever it breaks free of its cage, the inflation beast chomps away at your purchasing power and wealth. But it's the level of worry that matters. Some investors are panicking about inflation, but that's unwarranted in my view. Successful investors rely on data, not emotions. They create a long-term investment strategy and stick with it, calibrating as necessary, but never simply dumping their stocks based on the day's headlines. You should remain vigilant, but don't overreact. First, let's look at the latest inflation report and put it into perspective. The government reported Thursday that the U.S. Consumer Price Index, the CPI, jumped 5% since May 2020, the fastest pace since August 2008. The 3.8% jump in the core inflation rate, which excludes volatile food and energy prices, was the sharpest increase in almost 30 years. Take a look at the following chart. The consensus estimate had called for the CPI in May to increase year over year by 4.7%. From prices of food to lumber to gasoline, Americans have seen higher prices in stores, and now their anecdotal pain has been confirmed by the empirical data. The return of inflation after a decades-long absence is spooking consumers, but counterintuitively, investors weren't alarmed by the numbers. In the wake of the CPI report Thursday, the major U.S. stock benchmarks closed higher. The Federal Reserve shrugged at the numbers. The central bank insists that the inflationary spike will abate as the year wears on, when pandemic anomalies such as supply chain disruptions settle down. The analyst consensus for inflation in 2021 is still only 2.26%. Wall Street doesn't expect the Fed to react to Thursday's CPI reading by hiking rates, which accounts for the concomitant rise in equities. Of course, rising energy prices are a major culprit behind higher inflation. As you can see from the following chart, crude has been on the ascendancy year to date. Take a look. But keep in mind these latest CPI numbers are year-to-year comparisons, so it's logical that consumer prices in 2021 will be sharply higher compared to 2020 because of the economic collapse wrought by the pandemic last year. The comparative baselines in 2020 were abnormally low as the global economy teetered on the edge of an outright depression and unemployment soared. My advice about the latest inflation data, it can be summarized in 4 words. Relax and buy stocks. For details about the themes I've just discussed, consult my article that accompanies this video presentation. In the meantime, if you want to reach me, well, I'm very easy to reach. Just send an email to mailbag@investingdaily.com. Thanks for watching. Stay safe and stay invested.